What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today, my guest is portfolio manager at Crescat Capital, Tavi Costa. Big fan of Tavi's. Love the work he puts out on social media. If you're not following Tavi on social media, I highly recommend you do. He's most active on Twitter and on LinkedIn. And for a while now, he's been talking about this inflation play. And what I really like about Tavi versus some of the other macro people that I follow, he talks about how he's actually trading and investing in this inflation play that he's seeing. So today we focused on how he's trading and investing in the current macro theme that he sees, which is inflation. We talked a lot about the gold and silver miners. We talked a lot about gold and silver in general. That was pretty much the largest part of this conversation. We talked about materials, not something we talk about a ton on this show. We talked about the US dollar, interest rates, how Tavi is shorting tech right now. He's short tech at the moment. We talked about cryptos, Bitcoin, a little Ethereum, a little Bitcoin Cash, and something we don't talk about a lot on this show, really probably maybe ever before, and that's real estate. But you got to talk about it right now, because if you're going to talk about an inflation play and everything that's going on in the world right now, got to talk a little bit about real estate. Futures Radio Show is sponsored by CME Group. They're the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. You can listen to Futures Radio Show podcast anywhere where podcasts are available. But if you want to watch Futures Radio Show, remember, starting this year, we are now on video. You can check us out on YouTube or on anthonycrudele.com. This show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 futures symbol RTY and Micro E-Mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Tavi, thank you so much for joining me, my friend.
Thanks for having me, Anthony. Looking forward to this.
I've been looking forward to this conversation with you for a long time, because I've been following you on social media, and really, you're the top person I go to for content on really gold and silver. And I'm pretty active in gold these days. And, you're one of my favorite follows for this. And sometimes I get myself caught up into what my favorites are, because I think everything you're saying I agree with. And sometimes it leads to too much into me getting a little bit too aggressive with my plays, because I'm like, look, Tavi put this out. I'm looking at it, and I'm trading futures. And, I invest in gold and trade gold. And, you talk a lot about it, silver. And I just want to really pick your brain today about a lot of different topics. And as we record today, we're recording on March 8th. Busy day in the markets. I mean, it's really a great day to talk to you, because pretty much everything sold off today that we're going to talk about. Some stocks, NASDAQ got buried into the close. Gold had another tough day. What were your thoughts just on today's action?
It's a lot of thoughts on this one. I think, if you look at what it was leading today in the equity markets, especially in S&P, that was down, not a lot, but it was really the tech names are down significantly. But when you look at the leadership there, you see that actually a lot of sectors in S&P were up today. And some of them were materials. And you dive into the material names, you realize that there's actually a lot of names that are up because of news on raising prices. And it all goes back to this inflationary thesis, in my view. We've had inflation expectation holding up pretty well relative to what the move that we had in the markets. Certainly this whole reflation trade, where people are just looking for easy money is finally having some issues. But I'm a big believer in inflation in general. Reflation and inflation end up kind of being called the same thing, but it really isn't. This scenario that we're seeing right now with rates going up is a much deeper phenomenon that is linked to what's going on with the government. And so Rates moving up today again. That was another big move. And when you look at TLT, it's already at the lows of the March lows already, even lower than that. And if you think about how much it took in terms of monetary stimulus to take TLT up back then, while we all knew that was going to be massive treasury issuance, we just didn't know how much the Federal Reserve was going to come in for, and they came in with trillions. At the end of it was somewhere close to three. We're not at the end of it. We're probably at the beginning of it. But for the last 12 months, we saw somewhere close to $1 trillion to get TLT back to normal levels. And, it's incredible. I mean, the 10-year, I said this the other day on my Twitter feed, 10-year yields is barely moving from a grand scheme of, 30, 40, 50-year charts. It's really a small move throughout history. So it really goes to show the fragility in the system of how multiples really are extended in the tech side of things. And look into, Bitcoin up 6%. I've said this before. I do think Bitcoin, even 2019, we call it a call option on inflation. Well, that call option is definitely in the money, up again 6%. So there's definitely an inflation story happening in the middle of all this. Silver on Friday was down significantly along with the equity market. This time it held up better. This time was the juniors that kind of felt a little bit more. On Friday, the juniors held up pretty well. Gold not so much. As we were talking before recording, gold seems to be just steadily moving lower. But look, it still is a really cheap asset, and it should serve as a protection for inflationary forces and have so many drivers behind it. So happy to discuss that as well. But that's kind of my take. I think the tech space is absurdly overvalued. It makes no sense in an inflationary environment and how the Federal Reserve is trapped. It falls into the category of things, that are risky assets that you should be worried about. And we're seeing a great rotation from, out of a lot of large cap and high growth names to more value names, finally, where value names deserve to be bid up here.
This is where I go back to where I started off today. I mean, I agree with everything you said. And this is where, when you follow people on social media, and I love your content, I think a lot of people will always tend to go towards people that agree with them. I'm actually somebody who likes to be proven wrong, but everything that you put out with, I 100% agree with. And I want to talk a little bit about the trading side of things and how you are positioned. I mean, you talked about a lot of different markets just now, and I want to get into how you're positioned in some of them. And I want to start off with coming into today, I think prior to us recording, you had some shorts on. So you trade from long and short side, right?
Yeah. When we talk about buying gold and selling stocks, we're certainly doing that in our portfolio, but we do it in different ways. The buy gold part of it is long, mostly exploration discovery names. So more smaller companies where we're buying basically a stake on properties in different parts of the world where we think there will be significant size of deposits of gold and silver, some other base metals as well, but mostly precious metals. And that's basically what we're doing in the precious metal side of things. There's not much on the future side. There's not much that we're doing the physical gold or silver. Now, from the fund perspective, okay, now on the short side, we used to pick a lot of underlying short names through our models. And that used to be more the case. But given what's going on recently, we thought that would be better to add more to our option plays. So we've been just putting a lot of options, long put options in different indices in the equity markets, and especially in tech names, actually, that we've had for a while now. And we've been adding to them as we've seen equity markets kind of moving up nonstop. And that was gave us the opportunity to buy some of those options and be protected. That kind of correlation between stocks and the gold names had been pretty good for us from a risk management perspective. As we've had basically the whole reason why equity markets are up is because of what the Federal Reserve has been doing. And so, since March lows, I don't think we've been anywhere close to where we are today if it wasn't for what the Federal Reserve did in terms of monetary dilution. So, it helps. Back in March, we're thinking, well, let's cover some shorts, not everything, but let's cover some of the shorts and buy some precious metals. Why? Because we thought, if they're really going to come in and really expand the monetary base and issue a lot of treasuries, basically monetize the debt, we thought that precious metals would lead the way up. And it definitely did at the beginning. And then more recently, we've had the equity markets kind of leading the way. The good thing is that the exploration names, even today, they're doing pretty well, especially the ones we're getting involved. They're holding up pretty well. Some of them are up significantly. So, there are always two aspects to everything we hold. Where in the precious metal side, which is the activist side, which is being successful in, getting the right money at the right place and focusing on the right exploration targets and bringing the right expertise and telling the story and all that. Well, if you get that right, that's why we had such a great performance since the gold really began to drop. And gold is down 20% since August. If you think about it, from 2011 all the way to the bottom of gold in 2015, gold was down somewhere close to 44%. We just had half of that now. Yeah. And so looks pretty opportunistic in my view. I don't know when it's going to bottom, but our goal is just to keep raising money and deploying into this industry.
That's the one thing I've learned about trading gold over the years is that it'll just all of a sudden it'll rally, and then it'll rally a lot for a period of time, and it's one of those things where right now for me, I'm more on the trading side than the investing side of it. So as we continue to go lower, it's been tough for me. And I've talked about this a lot. I've been losing in gold pretty consistently, unfortunately, for a while now. I've been making money in some other things that I've been trading, but the thing is that with gold and the reason why I continue to do it is part of what you're talking about, the inflation play and just everything that I see happening in this world with the Fed and just so many things. I continue to think that gold, when it starts to go, it will be potentially a frenzy to the upside. I could be wrong, but once again, it could be death by 1,000 cuts by the time I get there. But I want to go back to a little bit more of what you're looking at in terms of how you're playing this, because this is why I like reading your stuff, because you don't just talk about what you're seeing. There's an action plan behind this. And so it's long materials, right? I mean, you long some of the material stuff in that. So you're long certain sectors within the market. You're buying puts, so you're short some of the tech names, and those individual names are indices. And then instead of just buying gold, you're buying the miners. And when I look at the chart, because I look at GDX and I look at them to see where they are relative to gold, because when I go to the stock side, I will go, if I see gold get a bounce and they're stronger, sometimes I'll just play them instead of playing just the futures in gold, because I like to buy the strong versus buying the weak and think they're going to make up for it. So they have been stronger, and I've noticed that. So I've had some little stock plays here and there with it. But I wanted the one market that we didn't talk about, and you talk a lot about this, is silver. How are you trading that?
Well, on my personal account, I have some future contracts and physical and some other things. But in the funds is really through it's gold and silver in the ground, basically.
All in the miners.
Yeah, and it's tough to find pure silver miner, but we've had perhaps one of the largest discoveries in silver in Bolivia now with Eloro Resources. There's some other names that were involved. Defiance Silver is a great one that were also involved, Kuya Silver and so forth. And those are all just ways of being long silver. SK Mining has a lot of silver in its property. So yeah, we liked those. And I should say, I mean, you asking about positioning, there is the long gold and the short stock portion, but there's also a very large dollar position in our fund today. We are long the dollar in a lot of different ways through also derivatives that we have given our views about emerging markets. We think that the dollar is fundamentally stronger than um, almost any other fiat currency worldwide. And so we have dollar positions, especially relative to very cheap ways of doing, either regardless if it is the dollar versus the Hong Kong dollar, and or just the US dollar versus the Chinese yuan. We think that, just look at as a barometer, look at the Brazilian real and what's going on, especially now, it's actually completely broke down depending on how you look at it. In other words, the dollar is appreciating relative to the real, and it's a good barometer for the whole emerging market space. And I think we're going to see some big FX moves here going forward. That means just the dollar appreciating relative to those currencies. So we like to be long the dollar. I think miners is a great way to be long the dollar too, because you be buying a gold miner in Brazil. I mean, their cost is basically linked to the local currency. So as the local currency depreciates versus the dollar, and they're selling a hard asset, that's kind of interesting. So it really expands their margins. So we really like companies like that.
Yeah, I mean, when I'm looking at this, the way that you're playing this, and you always talk about in a lot of your tweets or things that you put on social media, this could be just the beginning. I mean, we're just seeing this now. I mean, you talked about this in the beginning, and I totally agree with this. And this little move in interest rates is really nothing. I mean, it's minimal. I mean, it is to traders, because when you look at it, it's finally getting some volatility in these markets, and you're seeing the reactions. And we always say as traders, it doesn't matter until it matters. Well, right now interest rates matter. I mean, that's just the bottom line. I mean, you could say what you want, but the two charts I'm looking at all day now, and I used to be a 10-year trader a lot more actively. Now I'm using them more as confirmation, and the dollar is another one. And I can't remember a time, and I'm sure you'll correct me and just talk about where we've had interest rates going down the way that they are. I mean, or up, I should say, but bond futures going down, and the dollar is barely getting a bump. And you saying that you're pretty strong position in the dollar, and that's a contrarian position to really most people that I follow. Most people think it's death of the dollar. The dollar's done, and the way that you're just putting this all together. One thing I really want to talk about is not just to where we are today. Like, we know this is what your position coming into today, but where are we in this? Because I like to know as a theme as a trader. Is this the middle of the theme? Is the theme just ending? Is this the beginning? Where are we in this theme that you've put together with your plays?
Well, it's a lot of things going on. Number one, there is this kind of money party going on with the government transferring a lot of money to the population in the U.S. and some other governments as well. With helicopter money types of policies that really exacerbate inflationary forces. The second part of this is from a supply side of commodities. We've never had so many years of underinvestments in the space, and so this whole area with a lack of exploration, lack of investments in exploration budget as well. CapEx for miners in almost every commodity has been declining, even with exploration companies in the oil space have been declining as well. And so we've had a long years of underinvestments in the space, at the same time as we've just had a pandemic where it's forcing companies to be under capacity. So production is not rising in a lot of those spaces. Silver up 50% in 2020 at the same time as production is down. It looks a lot like 1919 during the Spanish flu, when we've had similar situation that reaccelerated inflation, not because of aggregate demand, really it was because of aggregate supply that was really constrained. So pretty similar to that. So you're thinking about themes. well, this is just the beginning from a hard asset situation where we have global imbalances of debt, fiscal problems, and so forth. Though those imbalances create the demand for hard assets at the same time as you have commodity constraints in terms of supply. Well, that creates a mismatch of demand or supply and demand. And so it makes sense to me to be long commodities. But as a normal macro trader or any trader, when you see, this extensive move on the short-term side, in commodities and rates, it makes you think, well, we're probably going to see a reversal, and then, and then maybe we'll see where we go from there. But the general move is higher in my view for commodities. I mean, it's, can we see things get heat up in the short term and they take a breather and then go? Yeah, that's kind of what I'm thinking. I mean, obviously commodities had a big run. And as a fund, we do watch those things, but you gotta, if you're building a business and you're really trying to buy properties worldwide and really taking advantage of this supply problem that is going on, think about it. I mean, most investors really buy the large miners. They only touch, you go up in the risk curve and you buy, the GDX members, and in a good day, you may buy the GDXJ members. That's about it. Who is really diving into the exploration names and buying those very illiquid names where you can buy $30 million companies, get a significant stake on things that could be worth, north of multi-billion-dollar sort of market cap. I mean, that's for me, that's what the opportunity is. And in the 70s, a lot of companies were able to do that. Inflation adjusted, and on the currency side, there were a lot of examples of successful investors that did really well during that time, focusing on exploration and discovery. And I think there is a place for smart money in that segment of the industry, and that's where we are trying to focus and really forget about this noise of the daily move in gold and silver, and really trying to focus. Are we in a secular trend for gold? Yes, in our view. Okay, well then, let's build a whole business behind it and, raise money and deploy into the best high quality projects that we can find. So that's really where we're focused on. But no, your question on themes, I mean, there's a lot of things. Well, there's the macro imbalance side of things, but at the same time, it's like that, central banks kind of figured out that things are not going to get fixed. So they need to really continue to expand monetary base globally. So we're seeing this, we started seeing this really with the Federal Reserve. Now we're seeing this, in different parts of the world. Brazil now with negative real rates. Brazil, negative real rates. That's insane. It's a very corrupted government, leadership, and it has always been, and I'm not talking about today's leadership, it's always been the case with Brazil. A very volatile currency with issues, structurally speaking, now in trouble, Brazilian real falling apart here. And so there are issues in the emerging market space. And we're seeing an inflationary move worldwide. And I don't think a lot of people really paying attention to the long-term impacts of all this. At the same time, the Federal Reserve is saying we shouldn't worry about inflation. We're seeing helicopter money everywhere. We're seeing the population, demanding now stimulus checks. Good luck taking that away from the population. Good luck. And so it's a new trend, right? I mean, it's and it's not new per se. I mean, we've seen similar things in the past of this kind of hand holding from the government. So deficits are here to stay, in these levels that we're seeing about World War II levels. And what does it mean? I mean, who's going to pay for this? Pretty simple. The Fed cannot take this forever. I mean, it's impossible. They're not going to let, gold take off. I mean, they might not have an option here, but at some point they might say enough's enough. We can't do that on our own. So what's going to happen is taxes are going to go up. So that's another trend, right? And how does taxes going up play with, the equity markets being record overvalued today? Well, it doesn't, that's not a good combination for the two.
Doesn't help them.
So Investors need to start thinking about this. But no, everyone is focused on this. And the sad part about it is that the retail is now getting to the party. And when does the retail, investor base come to the party? At the end of the party, not at the beginning. So, and they're not holding the entire bag, but they're certainly holding a large, significant size of it now. And so that's the sad part about it. But, what can I do? I can only protect my own capital here and share the information. I've been doing that. And I think the Federal Reserve is completely trapped. Clearly, inflation is likely to get out of hand. I just heard another guy talking about he's all this inflation bull as well, and he's saying, "Look, I think we're going to see CPI in the north of 3% this year or so." And I was like, 3%? I think we're going to see a lot more than that. No, I think it's, and that's the very understated, manipulated index. And I think even that one is going to go up to north of 6% or so. And I think there's a high probability of the same level that a lot of analysts are missing their estimates. And that's why we saw those negative surprises back after the pandemic crash, where nobody knew where unemployment rate was going to be or initial jobless claims. And we saw those crazy estimates and everyone was wrong in a huge way. I think everybody's going to be wrong about CPI. And so I think there's a high probability of a lot of people are wrong-footed here.
Tavi, we're going to pause here in just a moment for 30 seconds. I'm just loving this conversation. I've taken so many notes. I filled up my sheet of paper already. So everybody, when we get back, a lot more to talk here with Tavi. Hang tight. We'll be back in 30 seconds.
Get S&P 500 and NASDAQ 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-Mini options with TradeStation. Get a piece of the pie now.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. Welcome back, traders. Tavi's still with me. Tavi, I'm just loving this conversation, learning so much from you like I do on a regular basis. And the first thing I want to talk about is I mentioned how I'm trading gold. I know a lot of people listening to this trade gold, invest in gold. I know a lot of my friends that are listening to this are always asking me, how much further is gold going to go down? Or should I be buying more? A lot of guys are that I'm friends with are buying it, in bullion or all different ways, right? I'm a trader. I've been trading, and I talked about how I've been getting chopped up with it. And even though I follow you, I recognize that you've been talking a lot about going towards the companies that are, the miners. And to me, I don't want to say an aha moment for me today. I mean, I'm a trader. I like to be in and out of gold prices. That's just what I do. That's how I made my money. But I think in this particular theme, I need to step back and start thinking more like an investor and to utilize some of the things that you've been talking about and go more of a longer term approach with this to take some of the volatility out of being long gold. Because let's face it, I don't care who you are, even if you've been long gold for, I don't know, however long, and you've hit a winner, and you start seeing it come down this much, it's uncomfortable. And we talked about how the miners, they've been holding up, they've been stronger. And you said that there's some of these names that are, I think you said $30 million companies that could be, who knows what. I want to start off with, what are some of those names you're looking at?
Well, it's a good question. And those names actually have held up pretty well. And some of them sold off. But the whole point is to have a portfolio of them. We've got 50 to 60 names in our portfolio today. And they're really focused in geographic locations of the world. We have places, a lot of investments, a lot of exposure to the Golden Triangle, Newfoundland. We have a lot of exposure in Nevada in the U.S., some parts of Mexico, Bolivia, Peru. There's significant exposure in some parts of Brazil and even Australia. So we liked it really starts from a macro level as you get very constructive on gold, silver, and metals in general. You start thinking about what's going on with the mining space. And they have been called capital destroyers, and rightly so, for 25 plus years. Finally, they're actually generating free cash flow, not diluting capital as much as they used to. Equity issuances, they're actually buying back shares, especially the larger names. Top 10 miners today is buying back shares that they've never done before. So we have free cash flow growth, and those. So a lot of those larger names in the mining space are getting cashed up. And at the same time as they have is sort of a supply cliff issue where there's a lack of exploration, a geological problem of finding gold and silver and copper, you name it. And so they're going to be looking for high quality deposits to extend their production line. And when we thought about, we looked into this, and you start looking down into the smaller names. When you look at the exploration discovery, it's about $600 billion of companies in the entire precious metal space today that are public. The exploration names are probably less than 5% of that. So there's a lot of opportunities, and about 2,000 of those companies that we look at that are not worth our investment. So there's a lot of screening behind this. But we liked a lot of companies in those specific areas. And I'll give you a few examples. Askey Mining, for instance, is an area where Askey Creek was a mine where it was basically a money maker for Barrick. And it's today where Skeena Resources. But this was a money maker for Barrick, and the whole reason why they bought Homestake Mining at the time. And so we're seeing some similar anomalies in the region, in the south of Askey Creek, where there's a company with a massive land package called Askey Mining, and we think there's an Askey Creek too in this place. And really, when you look at it, those are VMS deposits. They're very rich, mineralized rich deposits, and what you find there is a chance that property that's a 520 square kilometers in the Golden Triangle that they own, where we think there's at least 7 other VMS targets. And so, it's kind of thinking, at least another 7 targets that look a lot like the Askey Creek, numbers that we saw, intercepts that we saw back in the day. So, or at least I shouldn't say intercepts, but similar geological patterns that makes you believe that perhaps we could find several or so VMS deposits in the whole region, so, or in the whole land package. So those things could be worth how much? That's a company that's worth $200-300 million depending on the day. It is volatile, but we think this could be worth north of $5 to $10 billion depending on how successful they are. So we like to look for those positions, and after finding that, we started looking for other names that are in the surrounding areas. Newfoundland is another great area where we have a large position, a lot of other companies there. One of them would be Newfound Gold. Newfound Gold is probably one of the largest intercepts that we found of gold and drill results that we saw back in North America. It's truly remarkable what they're finding in that region. And this could be, another, true money-making business that is actually, pretty shallow areas where you can mine relatively easy. And so, we like companies like that, and we're focused in those areas. In Australia, Nova Resources is going in production. So that's more on the other side of what we call the Lassonde curve. So there's the discoveries and exploration. There's also the developer names, companies that already put a lot of money on their property, done all the work. But, unfortunately, for whatever reason, the stock price has collapsed. And so we like to buy companies at cheap levels that maybe could get their things ready to get into production. And so Nova Resources is getting to production now. A company that is, if you just look at the asset that is actually providing or generating free cash flow, is probably worth 2 to 300 million. 2 to 300 million on an asset that is generating somewhere close to 100, or will probably generate somewhere close to 150 million of free cash flow on a year. I mean, I can't find anything like that in the equity markets today. So that's kind of the opportunity here. Gold and silver in the ground. And a lot of times we end up finding a lot of copper and some other minerals or metals that are interesting in different ways that fit even the green agenda developments that we're seeing. So a lot of really exciting things going on at Crescat Capital. So that's basically how we are positioned right now. But there's, like I said, 50 to 60 names that were involved.
We didn't even talk about copper. Well, we can't even, I don't even want to go there right now. That's it could be a whole nother conversation we have in the future. But I mean, it's obviously important to keep an eye on it. I want to stay really on gold and silver because a couple things. Number one is why? Why gold and silver? And I know that you and I, we get this, but I think there's a lot of people listening that say, why gold and silver? Because we mentioned a little bit in how Bitcoin and just the crypto sector in itself has really, in my opinion, taken hold over in a hedge against central banks. It's really been Bitcoin. And people can say that's not what it is. But for me, when I look at the action, that's the way I'm interpreting it. I know that there's more to it. And one of the things that has been really well for me that I've been making money in is I own a good amount of Ethereum and I own Bitcoin Cash. I actually don't own Bitcoin, but I own Ethereum and Bitcoin Cash, and they've been doing okay. And why gold and silver? Why so focused on that?
Well, I think it's the same level of opportunity that a lot of crypto investors found back even post 2017 crash in gold and in Bitcoin, and a lot of macro shops shifted their own business to really focus on crypto. Novogratz did a very successful, shift in his business and is doing really well. And, we thought that we could do the same, not the same, but something similar in the gold space of an area that not a lot of people are focused on. So it is not contrarian for anybody to say, I like gold or I like silver or I like Bitcoin, right? We walk on the streets. I would say a lot of people would agree with us. This whole thing is going to collapse in terms of fiat currencies and so forth. But there's not enough people doing the homework and really going deep into more illiquid names that perhaps could become very liquid. And maybe liquidity is a problem for a lot of investors, or maybe is the geological knowledge. So why gold and silver? Well, there are alternatives of the monetary system, and Bitcoin fits that category too. So when you have monetary policy becoming a funding tool, you have the Federal Reserve becoming more and more responsible for suppressing interest rates through the expansion of the monetary base. It creates a supercharged environment for assets that serve as an alternative for the monetary system. And I think, it makes sense to me that in this speculative environment, we're seeing the most speculative of all those alternatives to be bid up significantly, which is Bitcoin. There's nothing wrong with Bitcoin. I think it's a great asset to own as well. I personally own it too. But the Fed is really forced to run the economy hot. And, we're seeing a global economy that is also on the verge of a commodity supply shock inflation like we had in 1919, like we had in the 70s. And it's being, again, supercharged by wealth transfer from the government to the people. So, so we're looking at this and we see, a 12-year breakout on commodities, and you start seeing inflation expectation, that continues to move higher regardless of nominal rates moving higher. And when people come to me and say, look, one main reason why gold has been down recently is because of real rates. Now, is that because nominal rates are going to continue to go higher that I should not be buying gold? Well, folks, just look at what happened in the 70s. It's pretty simple. 10-year yields were rising there too. but inflation was rising a lot faster. So therefore, it became real rates actually decline. So I think we're headed towards that. I think we're in an inflection point for inflation. Um, and like I said, there's a large mismatch between demand and supply, and the political environment, right? Well, we're seeing the Democratic sweep adds to the table. We're seeing Janet Yellen is back in the game. Bernie Sanders is also taking a more leadership role in the budget side of things. We're seeing Elizabeth Warren taking a more leadership role in the finance side of things as well. We're seeing the IMF calling for the Great Reset. We're seeing the Federal Reserve on basic and autopilot with QE, not thinking to raise rates. We're seeing debt continue to increase over time, and I don't see an end to it anytime soon. Like I said, I think it's going to lead to tax rates going up, but and so and then at the same time, I said the stuff about underinvestments in this whole commodity space. It just adds to the whole thing. So it's like macro imbalances along with commodity supply shock issues. At the same time as we're seeing, the bottom 50% of the population really benefiting from this wealth transfer, and it may not benefit on the long term because of inflationary forces. But right now, we're seeing the largest increase in net worth of the bottom 50% we've seen in history. In the middle of a recession, it looks a lot like a depression if it wasn't for, monetary stimulus and fiscal stimulus. So, when people say, look, Japan didn't see inflation and they did everything that we're doing. No, that's wrong. Japan did not deliver, $2,000 payments to their population like we're doing here. And coming from an emerging market, we know what the bottom 50% likes to do. They're going to spend the money. So, and it is what it is. It's part of the game. I think it's, we're going to see inflation going higher. And so it's really, I think the answers, the part of silver is we're all focused on electrifying the world, but we don't think about commodities, and if we want to go from the old economy to the new economy, well, we need commodities, and silver is a huge part of that whole move towards, the green agenda to even electric vehicles and so forth. And so is copper. And so gold plays a lead role in terms of being a monetary asset. Silver benefits from being a monetary asset on top of having this industrial aspect that may benefit from those trends, and base metals may benefit as well. And this looks a lot like the 70s in terms of the relevance of hard assets, the relevance of commodities that completely lost their way in the last year or so. Oil having its best year in 30 years, no one was really talking about it. That this is
nobody,
oil.
Very few.
Yeah, I think I've seen some people, okay, I'm long oil, yeah. But are you seeing this move is real? This is why? Well, it has to do with the political environment too, and so and now we're seeing things heating up. We all know that debt leads to wars. We've seen that throughout history. Large amounts of debt leads to war. And now we're seeing geopolitical problems heating up in areas where they want oil prices to go up to. Saudi Arabia wouldn't mind if oil hits, $100 a barrel. Why not? So, I think there's a lot of interesting things going on at the same time as we have those macro imbalances, the commodity supply issue, geopolitical, the political leadership, the rush towards, any inflation hedge asset, and most importantly, if you're a large capital allocator and you're looking at this, you're like, okay, well, I need to buy assets. There are no assets that offer or yield more than inflation expectation today. So it forces investors to look for something that will appreciate in price. So when you start looking at all assets that have high potential for growth, well, commodities is right at the top of the list. Things are
Absolutely.
cheap. So, yeah.
Everything you're saying, this is why I agree with it. And I just go back to, this is why, on the crypto side is why I own Ethereum and Bitcoin Cash because, well, I own Ethereum because the people much smarter than me that I talk to about crypto always say you have to pay gas to use Ethereum. And I look at it and I say, there's a utility to it. It actually is being used. Bitcoin Cash, I've read a bunch about this where, if you're actually going to use Bitcoin in transactions, you're going to use Bitcoin Cash. Like I said, I'm no crypto expert. So I said, okay, well, I'm going to buy Bitcoin Cash. I'm going to buy Ethereum, and I trade both of them. And I go back to the metals. This is why I've loved silver and gold so much. And, gold, I just, I want to move on because I know we spend a lot of time on it. It's one of those things where I'm just surprised in this environment of the speculation you're seeing in Bitcoin and everything that you're seeing in all these other commodities. And like you said, this inflation play, it really just does surprise me that gold, as a trader and somebody who likes to feel the market, I'll call it just feels so weak. It's unbelievable. And that's the one thing with gold, and I've said it a little bit earlier today, is that it'll feel that way, and then all of a sudden it'll be bid, no one want to buy it, and it'll all go up at once. I know you've been watching this stuff a long time too, and that's what it does. It's what makes it such a difficult trade, and I'm thankful to have you show me how to get into some other areas to really participate in it, because the price of gold, as traders, we're always going to want to trade it, but some of these other plays we could be in and still have exposure to it. And even though they might be volatile, they're not going to be as volatile as trading gold futures or silver futures. You still are in that play. If it does start to get underway, you'll recognize it, and I think it'll actually make us better as gold futures traders, because we'll see those things start to work, and maybe the price of gold starts to come up all at once. I'm waiting for it. But I want to move on to a couple of other things, because I think this is where, going back to, I wrote down everything that you're in, and big, long the dollar. You're in some options plays and stocks. And I keep going. I said this a little bit. I said, I can't remember a time where you've had bond market and treasury markets going down, which means, interest rates are going up. We said it's, in the scheme of things, not that much, but the dollar really is barely bounced. It bounced a little bit today. I look at this and say, if the dollar really isn't rallying a lot right now as a trader side, I know there's going to be other reasons to why maybe it isn't, but it's like I'm looking at the tape going, if it's not going to go up now, it's hard for me to see that it can. Where am I wrong on that?
Well, I think the major reason, at least before the market began to fall, was the fact that the dollar is also a risk-off trade in a lot of ways, and basically we had equity markets continue to go higher. And so I think that played a role. Recently, we are seeing some pretty big moves in emerging markets, and I think that tends to lead towards other big moves in developed economies too. So I'm more, I guess, worried about what is to come, not what actually happened.
Got it.
The long dollar play, to be honest, it's not to say that we think gold is going to depreciate relative to the dollar. We just think that gold will appreciate, or I should say not only gold, but hard assets will appreciate relative to any fiat currency. But we want to find the most overvalued ones out there rather than just buying against the dollar. So technically and mathematically, by being long hard assets and being short other currencies that we think are overvalued, you're basically long hard assets in the most overvalued currencies in the world. So that's just an interesting position and how we would like to be. I think the dollar is fundamentally stronger than other currencies, and even with rates going up, I think that will become more attractive for other central banks to be looking for. And it goes back, you ask why Bitcoin and why gold and not Bitcoin or other things. Well, central banks buy gold, number one. And one thing that has not been in the discussion is the quality of international reserves. And in order to really improve your international reserves, you need things that have worked throughout history, and one of them is gold. So there is a high probability that we may see central banks continue to add to their gold positions going forward. We certainly have not seen that in the last 3 months or so, but you know, I'm on this for the medium long term. I think we're going to see a flow towards hard assets. Gold is in a secular move. Alternatives of the monetary system will benefit from this. Copper is even part of that too. Used to be part of the monetary system in other parts of history. It's going to trade more as an industrial, no doubt, but it's a tangible and hard asset that will benefit from what's going on. So, yeah, I mean, I'm very bullish on the dollar relative to emerging markets in general. I think emerging market crisis in some places could be a theme for 2021.
Yeah. Well, I mean, you explained it well, exactly the way that how you're playing it. I think that's extremely important, everybody. It's not just about, buying the dollar. I think the way that you're playing it, I totally understand that. One thing I'm going to talk a little bit more about, and it's still staying within the theme of the dollar, is at what point does the Fed step in again? I mean, are they going to let interest rates continue to creep up on them? Everybody talks about yield curve control. It's coming. I mean, what do you think about all that?
Well, I think rates. I think the Federal Reserve is not yet worry about it, but certainly starting to because of what's going on in the equity markets.
Yeah.
I think some of the members, as they have spoken in the last few weeks or days, is that higher yields perhaps reflect something positive in the economy instead. I don't know if I agree with that. I think that the equity market, yes, I think it has more to do with the lack of buyers of treasury and this tsunami of treasury issuance that we're seeing. The Fed bought what, $197 billion of treasuries per month in 2020. This year they're talking about buying 80 billion. While when we break down amount of things being passed in terms of fiscal stimulus, 2.2 trillion in March for the CARES Act plus 900 billion in December, that's $3.1 trillion. And then you add that was passed in 2020. This year we're probably going to do 1.9 trillion, then another 3 for the recovery side of things because it's a rescue and recovery package. And, that is 60% more than was approved back then, while the Fed is doing less. So, rates are in trouble. I don't know when the Federal Reserve is going to start getting bothered, but my guess is that, it will depend on the move in the equity markets. So I don't really have a lot of plays on interest rates right now, but I do know that they impact a lot of the assets that we own. I just continue to think that inflation expectation is incredible how it's holding up so well with equity markets falling apart. It's something that actually has been following the equity market and now is being, while NASDAQ, for instance, being falling, inflation expectation is diverging from that. And so, I think that's quite interesting. It's quite interesting because inflation, I think, is here to stay. We may have some pullbacks here and there, but I think we're headed much higher. And if that's the case, I don't think we're going to see multiples of 50, 60, 70 times sales in a lot of businesses out there. So it's just cost of capital is going higher. And for the level, the imbalances in the macro world are massive. They're really big. And the Federal Reserve is trapped, like I said before. So cost of capital rising changed the whole landscape of how you price assets. So,
yeah. I mean, that's really what this is. We're in a repricing across the board right now. A couple things before I let you go. Tech names. I mean, I don't know. I saw some stats. I'm not somebody who follows a ton of what percentages we are off highs or lows. I'm more trade level to level, and I trade NASDAQ pretty frequently. I think they said it's 11% or whatever it is off the recent high in the NASDAQ. You've been playing it to the short side by buying puts. from here going forward, how much more pain do we see coming in the NASDAQ or in tech?
So I think we could be at the beginning of something bigger, and that's because it's reflecting the inflationary problem, not so much the monetary stimulus. And at the same time, I view our tech shorts as a hedge on our gold names. And today gold was down, and but our portfolio did pretty well just because of the tech shorts. And so it's I think there's a lot of asymmetric ways of protecting your portfolio by being short tech. I just see it as a great rotation from near record overvalue names to near record undervalue names.
Yes.
And I don't know if this is a bubble that just popped. I have no idea. Nobody does. But I much rather own something cheap and sell something expensive. And I'll always be on a search for that. Right now, recently, tech has been working very well. Well, let me tell you, we got shorts on utility names, and they have not worked well recently, and at least today. And it's a sector that I'm worried about. I really worry about the whole utility sector because highly levered. It's a proxy for interest rates.
Yes.
There are record overvalue. They lose money every quarter. It's a regulated industry or sector. I don't know. I just find a lot of reasons why somebody should be short the whole sector, but it has not been working. So, it's easy to talk about your winners, i.e. the tech names recently, but there's a lot of losers too that are part of this kind of short book. We're certainly not short value names because we like value, but growth, high growth stocks, yeah, definitely everything. And there's like some kind of like tech behavior names that are not tech companies, like the Beyond Meats of the world, that act like a tech name, Peloton, and they're not tech companies in my view, but they act like ones. And so it's kind of interesting, but those are kind of high flying names that we like to be looking for shorts. Right now we're playing through indices, but we've had shorts in a lot of different parts of this. Software companies, it almost feels like all you got to do is say that your business model is a software. It's a software business model where you already automatically get a 40 to 50 times sales multiple. So regardless of your fundamentals. And I think fundamentals are going to start mattering again, just like cost of capital is going to begin to rise. And guess what? They're linked. In the 70s, a lot of those companies that are surviving today would probably not even exist. And so, it's easy to see all this innovation when cost of capital is cheap. We might actually see some, a different trend here, even with innovation might even be impacted by cost of capital going higher. But again, I'm not going to bet against that. That's just, I just want to be clear that I think there's a lot of opportunities in the short side of the market as well. And it's really that gray rotation idea of out of overvalue to undervalue names.
I love how simple you made it sound, and I think this type of thinking is so important for traders and investors. And I think a lot of what we're seeing right now is selling something that's been expensive and buying something that's cheap, and just looking at the whole landscape of what's happening. We've been talking a lot about themes today, and you're just seeing it. Things are getting repriced. I mean, and it's just happening. As a trader, I talked a little bit about this today, and with the miners versus gold, I like to buy things that are acting strong versus something that's weak. I like to be short. And right now, I look at the board today. I trade some stocks, not a ton. Mostly I trade Apple a lot. Apple's down 4% today. Tesla's down. I mean, Tesla's almost been chopped in half now. I mean, you look at a lot of these. Marvel's another company I keep an eye on. And I'm just looking at these, they're just getting, hammered. And then you look at a lot of other things that we're doing really good today. CME, CME is an exchange. I know people are going to be trading more, and was up a little bit today. But yeah, I think that sometimes instead of thinking too much, people just need to sit back and this is a lot, I think, of what we talked about today. Just what's the theme? What's happening out there? And what you're seeing in tech, it shouldn't be really a surprise after the moves we've seen higher. I mean, how many people were complaining about Tesla being overpriced the whole way up? And then when it starts to come down, everyone's like, whoa, why is it coming down so fast? Something's wrong. Well, this is what happens. Last thing before I let you go, I know that you and I are both market guys, but this is something I want to ask you about. I don't really see you put too much out about real estate. And being in the U.S., South Florida is where I'm at. And a lot of traders lately that I've been speaking with, we've all been talking about this. And it's because, once again, I mean, we're traders, we're investors, homeowners. This real estate market, in Florida, I'm speaking in my world. I don't know, the last time I've seen anything like this was 06, 07, whatever that time was. What are your thoughts just on real estate and what's been going on there?
Well, it's almost like national defense type of policy to continue to lap this whole real estate market to go up in prices, and that's because the bottom 50% of the population, the majority of their assets is tied up to real estate. It's the whole thing. You turn 25, 24 years old, you get married, and then you buy a house. That still happens in a lot of cities in the U.S. and so a lot of the bottom 50% of the population owns a lot of real estate, and that is certainly linked to mortgage rates going lower, which is suppressed by the Federal Reserve, which is buying mortgage-backed securities to a very, very fast pace. Actually, they just bought $110 billion of mortgage-backed securities in 2 weeks, which is one of the largest purchases ever. Obviously it's hard to look at things now because during the pandemic, they were buying a lot of it. But the reason, I usually write about more of that, more about what policymakers have been doing with this. But at the same time, real estate is so regional that it's difficult to have a stance. What's going on in Denver, where I am located, relative to New York is just night and day. So,
yeah,
everyone's talking about this commercial real estate collapse. That's not happening in Denver. We are now
Florida.
looking for a new office space. Things are booming. We can't find a freaking place to buy.
That's how it is here. That's what I mean. It's just, I guess obviously, with COVID and there's been a lot going back and forth and, where you want to live based upon policies. I totally get that. But I don't remember a time. Like in Florida right now, the prices are going up. It's unbelievable. It's scarcity again. And I'm going and I look around and I go, this is just the way I see in the market. There's just so many things. I'm like, I just wanted to see what you kind of thought about it. And I know it is, of course, it's regional. It could be based on a town. We know real estate's location, but I just think, I know because you look at everything on a macro level, just what your overall thoughts were on it. And like you said, Denver here in Florida, you things are going up. They're selling in a day, and people are paying above price asking for them.
I don't think it's the end of it either. I think, I can only speak for a portfolio, so we're not buying REITs. We're not doing that. But I'm just saying, if I could point to, I don't think they're at stupid valuations like the equity market is. So are some places very expensive? Yes. Some regions are already absurd prices, but I don't think in Denver, some prices are still cheap, relative to other places. And I shouldn't say cheap, but I think there's a lot of room for growth still. And it's an inflation hedge, and it plays into this hard asset, tangible asset
exactly
spectrum as well. And I have nothing against, I I kind of get it from the policymaker side, why they're buying mortgage-backed securities to the degree that they are, because it is a big deal if house prices begin to fall. That has a huge impact on consumption, as you know, bottom 50%, as I said, does own a lot of real estate. So you know, it's a big problem. So they have to keep it from falling, and you know, but from a strategy standpoint, where you're trying to really maximize your gains, you know, real estate in a good year, I think you can make a lot more money in the mining space where we are versus buying real estate. But that's just my opinion, you know.
Yeah. I just figured, you know, because I was thinking about it and just your overall theme of inflation and everything that you're looking at. And like I mentioned, I wanted to hear your thoughts because you look at things on a macro level. When for me, real estate's not what I do, but I just wanted to see what you thought about it. And I had heard a little bit of what you talked about, how they were buying the mortgage-backed securities and all that stuff. Like I said, that's not definitely outside my wheelhouse. But once again, it's just looking at everything that's going on. I mean, this is a puzzle, right, Tavi? I mean, it's a puzzle. And sometimes you can't just look at the screens and you just can't just look at charts. You've got to look at what's happening in other places. And with so many people stuck inside for so long now, people aren't seeing what's happening outside of their own spaces. And that's why it's great to follow you on social media, get a chance to talk with you today, learned a ton. I mean, I really did. Like I said, I filled my page up with notes, went through a bunch. And before I let you go today, tell everybody where they could find you on social media, Twitter, whatever you want to mention, and maybe a website if they want to learn more about you and what you're doing at Crescat.
Sure. Well, thanks for having me again, Anthony. And so you can find me on Twitter at Tavi Costa, or pretty also active on LinkedIn and Instagram. Actually, I just trying an account at Tavi Costa Macro. In our website at Crescat, www.crescat.net. That is where we put out most of our letters, and you can find everything about our content there, including charts, you know, macro deck charts, interviews, and so forth. So that's pretty easy to find us.
In this world, I don't know how someone doesn't follow you right now with the stuff that you've been putting out. It's been extremely helpful for me. I mean, I'm being honest with you. As a trader, I appreciate your work because it's not work that I do or could do. I know my strengths. I know my wheelhouse. I stay in it, and I get a chance to talk to people like you to really educate me on what's happening and what you're seeing. You know, some things we'll agree with, some things we'll disagree with, but at the end, I always learn something. And Tavi, I can't thank you much for taking the time to speak with me today.
Well, thanks for having me again. It was a big pleasure being here. And thanks for the opportunity to share my thoughts.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.